Eric Mother, Mother.com, with part 1 of this weekend's market analysis video for the weekend of September 24th and 25th, 2016. Let's take a look at markets here with about, let's call it 30 minutes before the close of Friday's session. Markets are called slightly lower. The biggest mover is crude oil, which is down about 3%. For this week's part 1, we are going to take a look at the video I recorded for subscribers in the afternoon, I think midday on Thursday, September 22nd, when markets were closing at the highs of the day. Otherwise, subscribers, be on the lookout for part 2 of this weekend's market analysis video, which should be available sometime, most likely on Sunday. So subscribers, be on the lookout for part 2. For the rest, here is yesterday's or Thursday's analysis of the market at the highs of the day. Otherwise, enjoy the rest of your weekend. Good luck. As always, see you on the other side. Eric Mother, Mother.com, September 22nd, 2016. Let's take a look at markets here right now with about, let's call it 4 hours to go before the close. Take a look at markets slightly to the upside, if not a good move here, especially the NASDAQ, which is recording all-time intraday highs as we record this. So let's take a look at those charts. We begin with the NASDAQ weekly. As of right now, we are pushing above this previous weekly closing high, previous weekly closing high. And for the NASDAQ, that level there is 5249.50. Anything holding the market above that level gives the bulls the chance to continue pushing high. In other words, holding and breaking out above the previous weekly closing high is actually very strong intention, or at least a sign that the market wants to move higher. If the market moves back below this number, then we can start looking for reasons to be bearish. But for now, blasting above the previous weekly closing high is what the bulls wanted to see, and it's exactly what they are getting. Now, if you take a look at the daily, and it's going to be a theme across this video analysis, is on the dailies for most of the charts, we are coming back to a resistance level. You can see on the NASDAQ coming back to this line that previously gave a short-term resistance level here of the highs of September right there. So this could be a problem as long as this line continues to hold the RSI as resistance. This should suggest that the next meaningful swing trade now could be pointing down. In other words, the NASDAQ would have to clear that resistance if we were going to see higher prices beyond today's close. Now there's a real fight going on, and I'll show you it's a weekly versus daily chart. And you take a look at the Dow, the line we've been drawing here. The Dow is coming back and tagging that line and bouncing very nicely, which is very bullish. The last time we also bounced back above the 50, which was this period, the market would go on to record new highs. So as long as the Dow is bouncing off this line and bouncing off the 50 weekly RSI level, the suggestion here is we should not be surprised if the market over time records new intraday highs, maybe even weekly closing highs. So the key is, as long as this line is holding, as long as the weekly RSI support at 50 continues to hold, one can expect fresh highs as far as the Dow is concerned. In the short term, there's some short-term resistance, and it is the daily chart again. And this is a theme across many of the charts, coming back here to test that line. And as long as we are below that line, the market stalls. There's also another line coming off the previous support line here. Support. We had uniform activity below the line, back above it, so we can continue to draw the line. And what I'm getting at here is we are coming back to back test that line. So we got two lines right now holding the market from moving higher. As long as those two lines are showing resistance, we should expect this market to start pulling back from current levels. Take a look at the hourly here for the Dow, and again we see two levels of resistance. We go back to the previous top side on the hourly, draw a line. Actually, not to be honest, this was a breakout recently, so we moved above that range, which is bullish, right? Remember, we were talking about the wedge that the market had formed coming into yesterday, and we broke out above that wedge. So this wedge breakout looks good, but it's actually, or coincidentally, coming back to test the previous break. Just how markets tend to play around with. And here, take this line here. This line was also that break right there, and that break was instrumental in bringing the market off the highs there. So we know that break was decisive. And here again, you see that what I'm getting at is on the hourly for the Dow coming back to test that level. As long as that resistance is being shown, we can expect that the market starts pulling back around where it hit the highs for the day today. Same thing for the SPX. Take a look at the weekly. The weekly is showing life, good support. And in order to understand what's going on here, for those of you who are new, let's take a look at the 3-year weekly for the SPX, so you can understand where this line is coming from. The top side previous resistance line was a good entry recently here for this movement to new all-time highs. So we extend that line, and you can see as of right now we've bounced on this line. We went below the line, back above it for this re-entry zone. So this is very bullish. And also there's another line connecting the previous recent lows, just like the Dow. Draw it like that, and the market is bouncing on those two lines. So the weekly here showing signs of life, suggesting that we should be expecting the SPX to do what the NASDAQ is doing and go to new highs. Now the challenge is short term, because on the daily, and I think this is why we should actually hold off from buying new breakouts around here. That's just my opinion, because we're coming back to test the recent highs on the right there on the S&P 500. On the daily, that line needs to be violated to the upside if the market is to move higher. On the hourly, you can see that it is just like the Dow. Short term, if you take a look at where the break took place, in that break brought the SPX off the intraday highs on an hourly chart. So we draw a line from here, and this is where the market has come at the highs of the morning, hit that line, and we're already showing signs of pulling back.